War in Europe. That's our top story today on the Wall Report. I'm your host, Greta Wall. All eyes are on President Biden as he's set to speak in less than 30 minutes after Russia attacked Ukraine overnight. Now, Biden is expected to announce severe sanctions against Moscow in response to that incursion. Ukraine says Russia has launched a full-scale invasion of the country after Putin claimed it was just an effort to demilitarize Ukraine but not occupy. Russia has conducted airstrikes across most of Ukraine, including in the capital city of Kyiv and in the key port cities of Odessa and Mariupol. Now, the major indices are all lower in today's session, but pairing some earlier losses, the Nasdaq did briefly turn positive after opening today in bear market territory, but is now back in negative territory. The Dow, meantime, is down more than 600 points and risks closing in correction, while the S&P 500 is slipping deeper into correction. Russia-linked stocks in the U.S. are still plunging, with the VanEck Russia ETF now down nearly 26%. And while stocks remain volatile, oil prices are up sharply. Oil futures are trading around $97 per barrel after briefly hitting $100. Brent crude futures, meantime, are around $104 per barrel, and this is the first time those prices have been above $100 since 2014. Natural gas prices, meantime, are also up about 5%. Now, data from AAA shows the national average for a regular gallon of gas rose again today in the U.S. to $3.54. Those prices, though, are expected to rise sharply in the weeks ahead as refineries pass down higher oil costs to consumers. But it's not just oil. That's the big focus right now, but other commodity prices are also surging as Russia and Ukraine are key suppliers of several metals and other elements for the world. Aluminum prices hit a record high of $3,450 per ton on the London Metal Exchange today. Nickel, meantime, surged to $25,000 per ton, the highest price it's seen in more than a decade. Now, meantime, the global uranium ETF is up nearly 3%. Ukraine is a significant producer of uranium, titanium, iron ore, and steel. And food commodity prices are also up sharply as well. Wheat prices surging more than 5% today, with corn up nearly 3%. And rising commodity prices and the possibility of more supply shortages is putting more focus on the Fed. JP Morgan analysts say they do not expect the bank to alter their rate hike plans at this time. The market is now expecting the central bank to hike rates by 0.25% in March, after previously expecting maybe a 0.5%, and most analysts are forecasting hikes at every remaining meeting this year. Richmond Fed President Barkin, though, saying today that they will continue to monitor this situation in Ukraine and how it may impact the U.S. economy and ultimately their plans for rate hikes. Now, let's take a quick look at the economic data that was released today. Weekly jobless claims falling more than expected last week. The Labor Department reporting that 232,000 Americans filed initial claims for unemployment benefits. That was down 17,000 from the previous week and better than 235,000 expected. Continuing jobless claims also fell by 112,000 to 1.48 million in the week ending February 19th. That was better than 1.58 million expected and the lowest level of continuing claims since March of 1970. And the Bureau of Economic Analysis revised fourth quarter GDP growth higher today. The U.S. economy expanded 7% on an annual basis last quarter, up from the previous estimate of 6.9%. The revision included increases in private inventory investment, exports, the PCE price index, and non-residential fixed investment. Those increases, though, were partly offset by decreases in federal, state, and local government spending. And new home sales did fall more than expected in January as prices continue to rise. The Census Bureau reporting today, new sales fell 4.5% last month to a seasonally adjusted annual rate of 801,000 units. Sales fell in the Midwest, the Northeast, and the South, but rose in the West. Now, new home sales were down 19.3% compared to January of 2021, when new sales did actually hit a record. The median new home price, meantime, surged 13.4% year over year to a record $423,300. Supply, though, in the new home market is rising, and the market has a 6.1 month supply at January sales pace. That's up from 5.6 months in December. Now, a healthy market does have at least a 6-month supply, but this is a little bit skewed. The new home market is still struggling to make up for the severe shortage in the existing home market. So I want to go back to Ukraine and Russia before we end things. Let me know your expectations for how this conflict, this war, will impact the U.S. economy. I'm expecting to see the quickest change in gas prices here, which are already at a more than 8-year high. Personally, I haven't paid over $5 per gallon yet, but I am anticipating it very soon here in San Diego. I'll see you all back here for the Wall Report tomorrow. Be sure to hit that subscribe button and the notifications bell before you go.